now, right now. Right 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 now, right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today, so we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since it's been out there. The government Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your weekly morning show where we bring you the latest and everything Bitcoin and cryptocurrency. And in today's episode, there's one major topic, and that is the effective federal funds rate decision that is coming out tomorrow. In today's episode of Coffee and Crypto, we're going to be talking about the effective federal funds rate decision coming out today. I said tomorrow, today, and we're going to be talking about why that decision is so very important for the United States stock market and, of course, for the Bitcoin market. Before you walk away from today's stream, you're going to have a much better understanding of the effective federal funds rate, what it is, why the Fed chooses to move it, where they're going to move it, if they're going to move it, and the impact that it will have on stocks and on Bitcoin. So let's go ahead and jump right on into it. We got Joe Bollier in chat this morning. Good morning to you. Megatron is in chat. BTC Crypto Alerts in chat. Mike Lowry here. Alex Nybo said good morning. Jarat is in chat. Here, Alex Nybo said, let's dump Bitcoin to 15K. Not sure if that's going to happen, but you never do know. Philly Skills 1428 in chat said, morning, Jeb. Good morning to see you. Good morning and good to see you. Let's see. Mr. Check 1984 says, yes, I'm getting notifications again. Live just hits better. Lol. Yes, I do love doing live streams with you guys. Robert Kehoe said, morning, Jeb. Good morning. Megatron said, no worries, Jeb. No time to clean. Said, hi, Jeb from Perth, Australia. That sounds like an absolutely beautiful part of the world. I would love to visit Australia, specifically Perth, one day. Gary Wee said, good morning. I've been watching since 2018. Good morning to you as well. Alex is in chat. Tommy G is in chat. Oliver Yates in chat. Good to see all of you. Thank you so much for tuning in. Again, I do want to issue a quick apology for being a little bit tardy. We have been, as I mentioned in yesterday's stream, cooperating in a criminal case against someone for some things that were quite violent. And so we're trying to figure out exactly where we need to take precautions, if we need to take precautions. So my lovely wife is making it a lot easier for me to be in studio today. I can't guarantee that I'm going to be able to be in studio every single day this week, but we're going to try and balance production value with the safety of our family. And obviously, you know which one of those I'm going to make the priority. I am able to be in studio today, but seems that we've managed to make the little kitchen set work well too. You guys seem to like that yesterday. So either way, we're going to be bringing you content. I just can't guarantee you where that content is going to be from, but I will continue to bring you high quality educational content wherever we may be. And I do love the flexibility to be anywhere in the world with an internet connection. And you guys are going to see the wonderful reality of that. By the way, because there seem to be some rumors floating around, the individual that I am talking about that is being prosecuted is not someone you know, and no, they are not a famous cryptocurrency influencer. In fact, that specific influencer, I reached out and asked how he was doing yesterday. I haven't gotten a response yet, but I'm hoping that I will get to speak to him. All right, so let's go ahead and jump straight on over to CoinMarketCap. Right now, Bitcoin is trading at $27,156. It is down 0.07% over the last 24 hours, up 3.84% over the last 7 days. And of course, we've been tracking this rally relatively closely ever since it began over the last week. And the reason this is so important is multifaceted. First and foremost, Bitcoin has been in this consistent downtrend since about the 14th, 13th of July, earlier on this year. And this downtrend is not going to last forever. Bitcoin does have a bull market around the corner. Many people have agreed on that. I think that that's going to happen. So we're presently looking for a recovery that would be able to kickstart the next phase of the Bitcoin rally. And I believe that's what we may be seeing right now. Bitcoin is under one major downtrend, as you can see right here, and that downtrend is a downtrend that harkens back and is very reminiscent of the downtrend that we saw back here in April, May, and early June. Bitcoin eventually broke through that, and we ended up going through a massive rally. Here on the daily chart, Bitcoin appears to be in the exact same pattern, and a couple of other things have turned up. What's the kid's name? Turned up Nelson? Not Nelson. Oh my gosh. What's the kid's name? Turned up the Simpsons. Welcome to the Coffee and Crypto live stream where I go completely squirrel on something. You guys know what I'm trying to say. What's the kid's name? Okay, anyway, I'm off track. If anybody can remind me the name of the kid from The Simpsons that says it always turns up his way, then you can let me know. But either way, things are starting to turn well for Bitcoin because Bitcoin has started to go through this rally and a few critical things have occurred. First and foremost, Bitcoin has managed to break through the 20 exponential moving average. Dun-dun-dun-dun. Dun-dun-dun-dun. Super Bitcoin has managed to break through the 20 exponential moving average. If you guys don't know, this is my favorite indicator in all of technical analysis, except for maybe Lux Algo, because Lux Algo has the 20 EMA and a lot of other stuff. So maybe second favorite technical indicator in all of technical analysis. Until I found Lux Algo, I would say that it was probably the number one. And that's because it does a remarkable job of telling us the trend that Bitcoin is in on any time frame. On any time frame, if you break above or below the 20 EMA, it typically means a change of direction has occurred and is likely being confirmed. The 20 EMA is a favorite among day traders because of just that fact. For example, look here on the minute chart. If you're trying to day trade the market and you're looking for different setups, then I can show you a setup right here. Look, we've got a symmetrical triangle pattern right here. Bitcoin managed to break above the 20 EMA on the minute chart, break straight through that downtrend. If you move up to the 5-minute chart, very similar story, but we managed to break through the 20 EMA a little bit higher. And then Bitcoin goes into a rally. There's plenty of different examples, if we were to go back throughout history, of the 20 EMA being exceptionally helpful on Bitcoin technical analysis. And recently is no different. Bitcoin has managed to break above, backtest, and find support on, and then hold this uptrend. We have a 1, 2, 3 so far of a major Elliott wave 1, 2, 3, 4, 5 formation. And that formation shows up right here. If we bring up our Elliott waves, you can see that we have a 1 wave, a 2 wave, a 2nd wave correction, 3rd wave to the upside. Now we may see a 4th wave correction and then a 5th wave breakout relatively soon, up to resistance of at least $27,700, if not even higher. And many things are coming into confluence or correlating right now in just that direction. You've got the 1, 2, 3, 4, 5 formation. You've got Bitcoin breaking above the 20 exponential moving average. You've got the MACD breaking bullish. You've got the RSI moving to the upside. It's above 50. You've also got Lux Algo here, which has given us green trend catcher confirmation because yesterday Bitcoin managed to close high enough. In short, the technical landscape on Bitcoin is looking remarkable. And if we see the decision coming from the Fed that the CME is expecting and that I am now expecting as well, then we're going to end up seeing quite a substantial rally on Bitcoin. So let me break down exactly why and how that works. Millhouse, thank you guys. It's coming up, Millhouse, thank you. Gosh, it's been a while since I've watched The Simpsons. Dun, 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 dun. That's The Simpsons, right? You guys will have to correct me if I'm wrong. Anyway, it's funny because in the next couple of weeks, I might be in Springfield, Missouri. Why? Well, you'll find out when we get there. Might make a vlog or two while we're there. Anyway, let's discuss the Fed. Now, yesterday I explained why we're almost certainly going to see a Fed rate pause. That's almost baked in. The market essentially anticipates that we're going to see a Fed rate pause. And because the market anticipates that we're going to see a rate pause, if we do see a rate hike, it'll likely be even more bearish than normal. Because the market looks at the CME Fed Watch tool right here and anticipates that we're going to see a pause, which means that to some degree, the pause has already been baked into the price. To some degree, the idea of a pause occurring is part of what has caused Bitcoin to rally over the last week after we saw how the Federal Reserve's, after the prediction of what the Federal Reserve would do did not change in light of CPI data. Let's say that again. CPI rallied 0.5%. The effective federal funds rate likelihood of a rate hike did not increase. It's still overwhelmingly likely that it will be a pause, and I explained to you the reasoning for that. The Fed is currently on a trajectory to hike rates every other meeting. They're doing 75 basis points, then 50, then 25, then 25, 25. Now, after they've done 3 25 basis point rate hikes, 1, 2, 3, they skipped a hike, then they did another 25. Now they're going to skip a hike, and then the question becomes, are they going to do another 25, or are they going to skip 2 rate hikes? The next decision on November 1st is the one that we don't really have a trend to predict. This trend is very easy to predict. It's very easy to predict at this point that they're not going to hike rates, but that they probably will continue to hike rates in the future, or at least leave rates higher for longer as a result of CPI. So if they're not going to hike rates, what does that mean for Bitcoin? What does that mean for our markets? Well, in essence, the way that the effective federal funds rate, the CPI, the stock market, and the Bitcoin play together is like this. And so this will help you to understand the impact that this will or will not have on the markets. The United States CPI is the consumer price index, and it tracks the inflation of the United States dollar based on the prices of goods in the United States market. So, for example, the cost of shelter, the cost of insurance, the cost of food, the cost of transportation, the cost of oil, the cost of liquefied natural gas. The cost of all of these different commodities have become are the constituents of CPI. So the CPI is put out by the Bureau of Labor Statistics, and the Bureau of Labor Statistics putting out that data is very important for the Federal Reserve and the Federal Open Market Committee. The Federal Reserve is made up of a few different tiers. You've got the 12 decentralized, if you will, not decentralized in a cryptocurrency aspect, but decentralized as in they're spread out across the United States. You've got the 12 Federal Reserve banks in 12 different regions of the United States. That was set up about 100 years ago. Then about 70, 80 years ago or so, the Central Federal Reserve Bank, the central bank, was set up to preside over those 12 other banks, because the reigning theory and the admission of the Fed was that those 12 banks not being able to work together in one cohesive strategy actually made the Great Depression significantly worse. So after the Great Depression, the Federal Reserve itself, the main Federal Reserve, was created. The Federal Reserve is run by something called the FOMC, and the FOMC is made up of appointees, and it's also made up of a revolving bench of presidents of those other 12 Federal Reserve banks. One of those is a permanent member, that being the Federal Reserve of New York, because the United States obviously has New York as its financial capital. So the Federal Reserve chairman of the Federal Reserve Bank of New York is a permanent member of the FOMC, whoever that may be. So the FOMC also has somebody on it named Jerome Powell, and he's the one that runs the Federal Reserve. He's also the one that sets the policy alongside the rest of the FOMC and kind of announces the policy alongside the rest of the FOMC for the entire Federal Reserve. Well, the Federal Reserve acts as something called the lender of last resort, which essentially means that if a bank goes bankrupt, then that bank running out of money, not so much going bankrupt, but if that bank is no longer solvent, as in it doesn't have enough funds to pay out the withdrawals that are being requested of it, then it can borrow money from the Federal Reserve to be repaid at a later date so that it doesn't go bankrupt and there's not a bank run. That's what happened during the late 19-teens that led to the late 1920s that led to the Great Depression, 1929. So the Federal Reserve acts as that lender of last resort to prevent a bank run, and they also issue all kinds of loans to the banks in the United States. Those banks obviously have interest. That's the way banking works. You borrow money and you pay interest. So the Federal Reserve loans money to the banks based on a certain interest rate. That interest rate is the interest rate that the commercial banks use to underpin what they're going to charge for interest. If the Federal Reserve is charging 5%, then the banks are probably going to charge 6.5 or 7% on mortgages, because that is how much because they're going to make the money on the difference. They can borrow money from the Fed, and then they can loan it out at a slightly higher interest rate. They make money on what's between, and the Fed kind of makes money, but they are actually just making money out of thin air. So any money that they make isn't really actually profit. It's just interest on money that they created. It's also a way of injecting new money into the economy rather than running the printers at the Treasury. So that brings us to how the Fed, the CPI, and the banks all work together. The CPI tracks the inflation, and the Fed has a dual mandate to keep unemployment low and inflation low. Well, the tricky thing is when you have high inflation, a lot of times that can actually lead to low unemployment, because if you have high inflation for the right reasons, i.e. the economy is growing, if there's economic build out, there's industrial output. When the economy is growing, a lot of times that will lead to inflation, because it costs money to build new factories. It costs money to build new roads, and that can lead to inflation in the short term, although it may lead to economic development and growth in the long term. That normally leads to low unemployment. If you have higher unemployment, a lot of times that will lead to lower inflation, because there's less people working in the economy to grow the market and lead to inflationary activities. So the economy has this tendency to move in the direction of low unemployment, high inflation, or low inflation, high unemployment. The Fed's mandate is to act as the balancing force that brings both of those down. The Fed's mandate, the dual mandate, is to use the effective federal funds rate, the loaning of money to the commercial banks to keep unemployment low, and the interest rate low. The inflation rate low. They want to maintain both of those rates. So what the Fed is looking at right now is that inflation went down to 3%, which is close to target 2%. 3% is almost something that they could live with because they average out target 2%. If it's 1% one year, 3% another year, and it averages out to 2, then they're okay with that. 2% because they want to target 2% economic growth, and they want the inflation of the United States dollar to match that economic growth, so about 2% inflation, which means that you're not making any money on the dollar in the long run. You're still losing 2%, but the economy is getting bigger. The big bold said, how old are you, dude? I just turned 23. I've been doing this since I was 16, so I've been here for a while. Can't believe it's been that long. Wow, that's 7 years. Goodness gracious. 6 years and change. So again, they're trying to maintain low interest rates. They're trying to maintain low unemployment and low inflation. When you are seeing inflation kind of bottom out and then start coming back up as it is right now, and if you've been watching this channel and you know what I've talked about with CPI, you know the CPI is going to go up to over 4% next month. More than likely. It might be 3.9. It's probably going to 4 or higher, 4.1. Unemployment is very low. At least that's what's being reported, and that's what the Fed is looking at. Whether that appears to be the case for you in your life or if there's a lot of underemployment, regardless, the Fed is looking at data that says they have low unemployment, so they're not really worried about that. That part of their mandate is secure. So they have to keep rates high because keeping rates high is how they bring down inflation. Think about it. If you have more expensive debt, then that makes it more expensive for a company to go and borrow money to expand business operations, which naturally forces their 6-month plan to extend into a 12-month plan because financing is going to be more expensive. It slows down the rate of GDP growth. It slows down the rate of spending in the United States economy. It slows down everything. Putting a higher interest rate is a little bit like tapping the brakes on the U.S. economy, and that can lead to unemployment. So they don't want to do that forever. But if there's inflation, they can tap the brakes with the effective federal funds rate to slow down the economic growth and therefore slow down the inflation. And so the Fed has raised interest rates up to 5.25 for that purpose, to tap the brakes, to slow down the inflation, and to spread out this economic growth over the course of the next 10 years, rather than it all just happening in 1 year and then the economy having a crash because you have massive growth and then massive lack of growth. The Fed has this mandate of trying to slow down growth, make it more slow and steady, because slow and steady wins the race, right? And in that way, I think we can kind of get behind that idea, even if we wouldn't necessarily agree all the time with the centralized idea of trying to plan an economy. At least in theory, the idea of slowing down growth to be more consistent, where we get 2 to 3% every year instead of 10% one year, 1% the next year, that is actually a good idea. Whether that's actually being implemented in the right way, that's where the conversation of whether the Fed is doing their job and whether they're doing their job the right way definitely comes into play. And I definitely have some gripes with the way that they've done that. So the Fed has this mandate: keep unemployment low, keep inflation low. Inflation is going up, so they're naturally going to use the tools at their disposal, i.e., cutting the balance sheet, which I've talked about in other videos. I'll leave that for now, and increasing the effective federal funds rate to bring about that lower inflation. Why are they then not going to hike interest rates, inflation right now? Well, because many times what the Fed tries to do is they try and bring the effective federal funds rate higher than inflation, then bring them both down together. If inflation's at 4%, they're going to bring it to 6%, and then they're going to see inflation come down to 3.5, and they're going to start bringing down the effective federal funds rate on while it's higher than the inflation. The Fed is not going to drop interest rates right now because they have not seen that inflation has turned around. So an interest rate an interest rate drop is nowhere to be found. Not in the next 6 months anyway. But they also don't want to hike rates because they're trying to maintain this plan of skip a step. And then in November 1st, we'll more than likely see another Fed rate hike. That's really going to be the decisive moment. So all of this information might be a little information overload, but let me apply it into a theory that you can maybe understand and take away and explain to somebody else so they'll understand the way the Fed works and why they're doing what they're doing. The effective federal funds rate taps the brakes on the economy by hiking interest rates. Remember, the banks base their interest rates on what the Fed's overnight bank transfer rate is. They have their own interest rate for the Federal Reserve banks. The commercial banks set their interest rates for everything higher than that. And if the Fed raises their rates, the commercial banks do as well because they're borrowing money from the Fed and they want to make money on the difference. If debt gets more expensive, that slows down expansion in the United States economy because expansion in the United States economy is almost always financed. It's very rare that you see a major company bootstrap a huge operation. Oftentimes they're going to finance it, even if it's only 1, 2, 3, 4 year financing. They're going to finance that, especially when it comes to infrastructure projects, because they're ridiculously expensive and have a low ROI. If you're trying to build a nuclear power plant, you're going to need to finance that, and it takes 20 years to pay that off. It takes 10 to 15 years to even break even on a nuclear power plant, for example. Now, we're not building many of those, but you get the point. You typically finance major expansions to infrastructure and large companies. So hiking the interest rate slows that down. If you're slowing down the growth of companies, you're also slowing down the stock market because the growth of the stock market is directly correlated to the growth of the companies in the economy. When you slow down the stock market, then you lead to people not wanting to invest in risk-on assets as frequently. Because if the economy slows down, the first place that you're going to see difficulties in the economy is in the more risky investments, is in the more risky tech startups, the tech companies. They slow down the largest because they rely the heaviest on debt. And also, if you have a slower stock market, then people start getting more conservative. If you have a very rapidly expanding stock market, i.e. 2020, when there was a huge amount of printing going on, there's high unemployment, so the Fed turned the interest rates down to zero, cranked up the money printer. Now they're doing the opposite. They poured they poured gasoline on the fire in 2020. Now they're pouring, water on the fire. When there's a lot of exuberance and the stock market is doing very well, people look at risk on assets like Bitcoin. When the economy is not doing as well, when the economy is slowing down, even if it's intentional, when the stock market is slowing down a little bit, then people don't look at Bitcoin as much. So there's a huge announcement coming out today. The effective federal funds rate decision is coming out here in about 3 hours and change. It'll be coming out 3 hours, 19 minutes. I think it even says it right here on FedWatch. You can see right here, my mouse doesn't want to work, but 3 hours, 18 minutes. There you go. Right there. When that comes out, you're likely to see a pause. It's probably going to be a bit of a nothing burger. It's already baked into the price. But how does that impact Bitcoin? Well, we kind of understand the way the Fed works now, why they do what they do, but how does it impact Bitcoin? Again, a Fed rate pause, so the lack of an increase is theoretically bullish for Bitcoin because it means basically that things aren't getting worse. It's a little bit more, think about it like this. It's bullish when you don't get hit by a car, right? It's a good thing that you don't get hit by a car, but you don't exactly. When was the last time you walked around celebrating, gee, I didn't get hit by a car today? Wow, I'm so excited about that. Unless you thought you were going to get hit by a car. Unless you had a near-death experience. Like one time, I'll tell you the story, and then I'm going to kind of wrap it out here. I was driving my truck, and this is so wonderful. I was driving my truck, and for some reason, I just thought to pray, Lord, just please keep me safe on the road while I drive. And I should pray that more, because roads are dangerous. But to be honest with you, this was a couple years ago, I didn't pray that very often. I was like, why did that thought come to mind? I was going over the bridge on 39th Avenue, going over I-75 in Gainesville. You can go look this up on the internet if you want. I was going over the bridge. And then about a minute later, I was driving. I was doing the speed limit in the fast lane. This SUV, pulled right in front of me. This is about 3 years ago. This is in the middle of COVID. This is in the middle of the pandemic, because I was trying to bring a friend of mine some supplies. And this car pulled right in front of me. And the only thing I could do, because I couldn't stop in time and I couldn't go behind them, the only thing I could do is I had to act quick. I could have died here. I swerved as hard as I could in front of the car. This is a true story. Swerved as hard as I could in front of the car, got my two driver's side wheels off the ground. Like, that is how hard I swerved. The driver's side wheels, I'm pretty sure, came a few inches off the ground. I could feel it, because I was like this. Swerved that hard, pulled in front of the car, and then curbed my passenger side wheels and just barely missed T-boning them. And then I also just barely missed them T-boning me. So I was very thankful in that moment that I didn't get hit by a car, right? And I was like, man, I'm so glad I prayed that, because I prayed that about 30 seconds before that happened. It was like, whoa, that was convenient timing, right? That's not I don't believe that was a coincidence. Anyway, very thankful that I was taken care of, and I should have died, to be quite honest with you. That was a near-death experience. I was going 45. Speed limit is 45. You T-bone somebody at 45, it's very high likelihood that something doesn't end well. I was thankful that didn't happen. Bitcoin, never thought there was going to be a rate hike right now. In the same way, when you're driving down the road, nothing happens, you never thought, there was going to be an accident, so I'm not thankful there wasn't an accident. Bitcoin's not going to be thankful right now that we didn't get a rate hike, because nobody was expecting that we were going to get a rate hike this month, based on the fact that the effective federal funds rate is skipping a step, as I said. So the fact that we're not getting a rate hike is probably not going to be that bullish of a thing, in the same way that if you don't get hit by a car and you had no reason to believe you were going to get hit by a car, you're probably not going to sit there and be thankful for it because you didn't think about it. But if you didn't think about getting hit by a car and then you do, then you're going to be pretty sad that you got hit by a car. And so when the cryptocurrency community is thinking we're not going to see a Fed rate hike, if we do, then that's like getting blindsided, and then we would have a major crash. if we don't see a hike, we're probably not going to see a massive rally, but it does pave the way for a major rally because we've gotten out of harm's way. So, is the Fed rate hike coming tomorrow? Probably not. Probably not. Is that going to be massively bullish for Bitcoin? Maybe, but a little bit like you're probably not driving around being thankful every single minute that you didn't get hit by a car, although we probably should be, but just realistically, we're probably not. That's about the way that we're looking at that right now. All right, let me go ahead and read chat here for just a second, then we'll wrap it out. His voice sounds like a little kid. Man, I sound like a little kid. Let's get a poll in chat. Who thinks I sound like a little kid? Because that's funny. The big bold, when I did a face reveal, I was 19, and I got about 500 comments, and everybody thought I was in my mid-30s because of the way my voice sounded. I'm not even trying to correct you. Maybe I do sound like a little kid. Maybe you have a little kid that sounds like me. I don't know. My son doesn't sound anything like me. But what I will say is that, yeah, that's funny. Hey, youth's a blessing. All right. Were you praying with your eyes closed while driving? No. Not doing that. I'll pray wherever I go, but I'm not going to pray with my eyes closed while I'm driving. Nope, not doing it. Not going to do that. Nobody would expect me to do that. All right. Cool. Well, hope you guys did enjoy today's video. I hope you did enjoy today's stream. Oh, man. I love you guys. I love you, Big Bold. If you need anything, let me know. Cool. All right, guys, like I said, gonna have to wrap it out. Do appreciate all of your patience and everything. If you enjoyed today's video, hit the like button, subscribe to the channel, hit that post notification bell so you don't miss a stream. Make sure to sign up for Lux Algo using coupon code JEB30. That's JEBB30 for 30% off at checkout. It did give us green trend catcher, which is a big deal, and we'll be keeping a close eye on Bitcoin. If anything major happens on Bitcoin, I'll try and make a phone video or something about it when that interest rate decision comes out. Before I go, I just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.